Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Well, Yatin, another day of range-bound trade, so to
correct.
say. The Nifty did manage to defend 24,750, but it was very ranged today.
Correct.
But the good part is that the broader end of the markets continues to outperform. Although the Nifty Midcap Index slipped into the red, but for the better part of the session, it managed to hold out in the green. In fact, the small cap index has managed to shut shop in the positive territory. India VIX has also cooled off slightly today, I think 2 to 3% or so. Remember, tomorrow is the monthly F&O expiry. We've seen range-bound trade today, but let's see tomorrow, maybe a day of action. NSE advanced decline ratio was 1:1. Even Stevens, similar number of gainers and losers. In terms of sectors, FMCG and autos continue to witness profit taking. In fact, FMCG index was down in excess of 1.5%. Most of the sectors were trading with a negative bias today, but PSU banking index managed to hold out. In fact, that index was up somewhere around 1% or thereabouts. Individually, clearly a day that belonged to life insurers, Yatin, stoked by great or good numbers, not great, but good numbers from LIC. That stock was up 8%. It had a rub-off effect on other life insurance companies like HDFC Life, SBI Life. Both of them were gainers. BEL also, among the gainers today. Second top gainer on the Nifty. You had Bajaj Finance, you have Bharti Airtel, Hero MotoCorp, ICICI Bank, Adani Ports. These were among the other movers. On the flip side, ITC, that likely stake sale by BAT, British American Tobacco, that saw the stock plunge somewhere around 3%. Also, the stock is trading ex-dividend as well, so that impact was also there. IndusInd Bank was a gainer yesterday. Today slipped into the red. Nestle, Apollo Hospital, Ultratech Cement, Tata Consumer, these were some of the other laggards. But I think there were some high flyers and some reactions to results as well when it comes to broader end of the markets. Take us through some of the names.
Yeah, so as you were mentioning, the advanced decline ratio was 1:1. So despite the markets being slightly range bound to weak in trade today, we had the midcaps performing well. In fact, today we also had the IPO listing Bellrise. That auto ancillary stock listed issue price was 90 and the listing close price is close to 98 rupees. So almost 8% kind of a gain that we saw versus the issue price. In the midcap index, the Nifty 500, we have IFCI, which has moved significantly. In fact, the stock is up nearly 30% in the last few trading sessions. Today also up 15%. Schneider Electric post numbers is up 12%, and MMTC also moving 9% in trade. What was not doing well is Escorts, and weak margin performance and overall early monsoons are impacting tractor sales probably, and the stock was down 4% in trade today. Fluorochemicals, which is Gujarat Fluoro, post weak numbers is down 4%. 3M India, ACE were the other stocks which were not doing well in trade. Obviously, we have LIC post numbers moving by nearly 8% in trade. BDL post weak numbers was down 2% in trade. So broadly, good day for mid caps, especially the result reaction were more on the positive side.
Okay, good to know that the result reactions were more on the positive side, but we also had some names that were in the negative zone today. ITC being a case in point. There was a stake sale in the counter via block deal. Likely seller is British American Tobacco, that happens to be its largest shareholder. Shares dropped, in fact, even because the shares are trading ex-dividend from today. 2.56% equity exchanged hands via the block deal. It happened at the rate of 417 rupees per share, which was at a 4% discount to yesterday's close price. Now, post this block deal, BAT is going to hold somewhere around 23.1% stake, but it will continue to be ITC's largest shareholder. Now, in March 2024, BAT had sold roughly 3.5% stake to raise somewhere around 16,700 crore rupees, and it was India's third largest block deal. And in its 2024 annual report as well, BAT had mentioned that it is important for the company to hold at least 25% stake in ITC. Going by that, one would say that perhaps there may not be a lot of block deals going forward, who knows. But if there is one, that could be an overhang. That's what Nuvama told us in an interview with CNBC TV 18. In terms of what BAT is expected to do with the money, it is expected to use the proceeds from the sale to help reduce debt as well as move closer to its target leverage ratio. But it is, just recalibrating its global portfolio, so to say. It has no plans to exit ITC entirely. it still has confidence in ITC's growth future going forward. And currently, ITC has 2 board members from BAT as representatives of BAT on the board actually. So Nuvama, has spoken about this block deal. They've said that the stock could bounce back post this deal, but it would still stay in that 430 to 470 rupee range. Last year, after the block deal, the stock had bounced back quite a lot, 5 to 6% post the deal. So this time around as well, it is expecting some bit of bounce back, but it will stay ranged. It has also pointed out that further stake sale by BAT could be an overhang going forward, but it doesn't really expect BAT to reduce its stake in ITC hotels for the next 2 to 3 quarters. So shares can go higher, it has pointed out, if there is no word on whether or not BAT plans to sell more stake. Stock, of course, hasn't had such a great run this year. 13% down on a YTD basis. Even the 6-month chart has shown negative returns, but on a 3-month basis, you've seen some positive returns, but nothing really to write home about.
Yeah, and valuation wise, Nandita, the stock is broadly at a 2.5% kind of a dividend yield on a trailing basis, and almost 24 times forward earnings, even if you were to assume the weak earnings or, the lower growth in the FMCG business. So, yes, valuation wise, things are, standing still for ITC. And remember, the stock also went ex-dividend by nearly 8 rupees today. That is also, a reason why the stock is down on an adjusted basis. But clearly, the stock of the day today was LIC of India. And, LIC shares surged nearly 8% intraday after a good set of Q4 numbers as well as good management commentary. Now, if you look at the management commentary, obviously for FY26, they are expecting a better growth in the non-par business, and the VNB margins from here on should improve according to the management. That is what they envisage, and probably, the markets, given the valuations being quite low, in terms of the overall embedded value, stock is trading at 0.7 times. So on that basis, also a lot of brokerages are positive. In fact, Motilal Oswal has a buy call on LIC with a target of 1050. And they believe that the management commentary on premium growth recovery should support the stock from here on. In fact, Goldman Sachs, who is neutral on LIC, did like the Q4 numbers. In fact, Goldman Sachs says that the margin improved by nearly 1.5% year on year because of better product mix. Not only that, the focus on non-par business as well as the focus on margin improvement is something that they liked when it comes to the management commentary. So, purely on valuations, on the kind of management commentary which they are talking about good margins moving forward, I think cheered up the street, and hence a 8% jump in the counter. In fact, since listing, Nandita, we have the shares which have seen record volume. So good price and volume action day for the shares of LIC.
And another interesting part is in an interview with CNBC TV 18, the management has said that they will not let the market share fall below 40%. They've pointed out that, smaller players are growing fast.
True.
And that is what is impacting market share negatively. But they will also make sure that their market share doesn't fall below 40%. In fact, they are saying that they will see market share expansion in FY26. I think that's also something that cheered the street as well. 8% uptick on shares of LIC. But another stock that was reacting to numbers and the street is pretty divided over the future prospects is Aurobindo. Pretty anemic today in trade, 3% down, sort of a headache because Revlimid sales, the impact will stop coming in, right? Because the patent expires in January 2026. And that was a blockbuster drug that contributed to the top line of a lot of these drug companies, the top 3, Cipla, Sun Pharma, etc. and Aurobindo as well. So that will be missing going forward, which is why I think, the management commentary is something that also came as a dampener. But if you look at the numbers, it reported an 11% increase in its revenue. It was lifted by robust demand in the US and European markets, but US growth seems to be flattening out, and that's something that could impact margins as well. That's also something that disappointed street. Growth in international formulation was good as of now. US sales saw a 13.5% jump on a year-on-year basis. Profitability was under pressure, and even EBITDA margin was slightly lower. As I was mentioning, there's a bull and bear case emerging when it comes to Aurobindo. Let's go through the bear case first, because Citi has a sell call on the stock, and it has cut its target price to 1100 rupees per share, which implies a 7% downside if you compare to yesterday's close price. It says that the EBITDA rather in dollar terms was 5% below its estimates, adjusted for Revlimid contribution of 40 to 60 million dollars actually. And adjusted for Revlimid contribution, the baseline EBITDA margin was 18.5%. Besides that, it also had a benefit of 100 crore rupee impact on a one-time impact on various cost lines, and that kind of benefited the company. Management commentary, as I said, was underwhelming according to Citi. They have expectations of high single-digit growth in FY26, ex-Revlimid, of course, and no material improvement in injectables will also be seen. There is a possibility of negative margin surprise in the next 1 to 3 quarters, according to Citi, because the growth in US market is flattening, and they have cut their FY26 to FY27 EPS estimates by 8%. Looking at the bull case then, Goldman Sachs on the other hand has a buy call. The target price is at 1275 rupees. It is kind of impressed by the fact that the company is aiming to, be resilient in terms of its performance despite, Revlimid impact from FY26. It says that the company has guided for high single digit top line growth despite the fact that, Revlimid will not be a contribution anymore. They've also pointed out that the company is aspiring to maintain its margins as well in FY26. Current valuations according to Goldman Sachs is at 30 to 40% discount to its coverage average, and this valuation, allays most of the concerns around pricing pressure as well as plant status. There was a fire in one of its plants, G penicillin G, there, and that impact is something that is factored in according to valuations, and that's what Citi is saying. CLSA as well has an outperform call, and they've also said that the guidance is factoring in the temporary shutdown of its penicillin G plant, and it is also taking note of the fact that the company has guided for high single digit revenue growth. Going forward in FY26. So all in all, street is divided, but let's see how the future trajectory.
I think the clear reason why the stock is down because of the management commentary. I think they are expecting quite low single digit growth for FY26 ex of Revlimid. So I think obviously there is base effect, and number two is that there is no Revlimid. So I think FY26 for many pharma companies who are showing good numbers in FY25 on the back of a few specialty drugs, few niche products, that will be probably missing in FY26. They probably need more approvals from the US FDA or a blockbuster drug really to cope up when it comes to growth.
That's true. Well, then those were all the stocks that were on our list this afternoon. Tomorrow is expiry day, and tonight we also have US FOMC meeting minutes coming out, so there will be some impact globally, but globally the cues are pretty strong, Yatin, this morning. Let's see what happens and if we react to any global cues. But expiry, that will take center stage tomorrow, so gear up for a lot of action and volatility. But with that, we've come to the end of Closing Bell. Thanks a lot for tuning in. Have a great evening, and come back and join in tomorrow morning as well at 9 a.m. Thank you.